Good morning. It's May 14th. This is To My Liberal Friends. Well, Joe Biden likes to portray himself as a moderate, someone who's in the middle of the political spectrum. But unfortunately for the public, the facts belie that claim. The proof is in the pudding when it comes to how Biden and his administration view the tax code. And boy, do they have some taxes teed up if he wins a second term. The tax bill that was passed in 2017 was done under what is called reconciliation. This is a budgetary maneuver that was originally intended to make corrections in the budget, but over time evolved into a process that both Republicans and Democrats have used to get things through the Senate when they don't have sufficient votes to overcome a filibuster. This process started in 1974, and Congress has passed 22 bills under this procedure. Policymakers used reconciliation to enact major spending cuts during President Reagan's first year in office, several deficit reduction packages during the 80s and 90s, and changed the National Cash Assistance Program in 96, and large Bush tax cuts in 2001 and 2003. More recently, reconciliation was used in 2010 to amend the Affordable Care Act and to modify the federal student loan program, in 2017 to enact the latest tax cuts, and in 2021 to enact additional COVID-19 relief through the American Rescue Plan. What they've done is taken this budgetary maneuver and spent trillions of dollars without really taking hard votes on it. Well, what does this mean is the tax bill 2017 will expire in 2025. Since the bill passed under this budgetary move, they have a 10-year lifespan. And we've already seen what Biden has proposed. The current top federal marginal rate is 36%. It was reduced from 39% in the 2017 bill. But Biden wants to raise that top rate to 44.6% on long-term capital gains and back up to just over 39% on ordinary income. And that would make it the highest since the tax was enacted in the 1920s for capital gains. When you couple that with state capital gains taxes, it means in some cases the government would take more than half of what you might get from an investment. But Biden won't stop there. In 2017, the corporate rate was reduced from 34% to 21%. Biden and his fellow Democrats seem to have forgotten that President Obama recommended that the corporate rate be cut to 22%. But Biden wants to take it back up to 28%. So why was it cut? The reason was simple. Other nations have much lower corporate rates. As example, Ireland has a 12.5% rate. Hungary has a 9% rate. France at 25, Norway at 22, and the United Kingdom just raised theirs up to 25. Corporations were simply moving their tax status to a country with a lower rate. If Biden gets his ways, there'll be a flood of corporate moves off the shores. Even more egregious is Biden's desire to implement a 25% tax on unrealized capital gains for people. Think about that for a moment. You own a stock and it goes up 20% a year. Now you'd have an unrealized gain and you'd have to pay taxes on that gain. But the next year the stock drops 25%. Do you get a refund on the tax you paid on something you never really got? Not under the Biden plan. And this would be a major disincentive to invest in the market and other areas. That means the market might fall precipitously and everyone with a 401k is going to feel that drop in their retirement accounts. It's going to impact the middle class the most. Looking at the entire 2017 bill, it reduced taxes for just about every bracket. The middle class got a larger percentage cut than anyone else. And if Biden holds true to his comment, then all those tax cuts would go away and you would be paying more in taxes. The Tax Foundation, a nonpartisan think tank, said that a single mother earning $52,000 would see a tax hike of $1,500. A married couple with 2 kids making $85,000 would see a tax increase of $1,700. Well, Democrats love to tell you how many dollars the wealthy get in tax cuts, but they never mention how many dollars they're paying. It's simple math. If you're paying $100,000 in taxes and get a 10% cut, you save $10,000, but you're still paying $90,000. Republicans are looking to make some of the provisions in the 2017 bill permanent. They would lock in those rate changes so that individuals and families at every income level keep more of their hard-earned money. They would preserve the deductions for small businesses so that these Main Street companies that employ over half the workforce, they stay in business and are operable. They would seek to increase the standard deduction that benefits over 80 million taxpayers and even increase that to keep up with inflation. Now just remember, that standard deduction is now $29,200 for 2024. But if it expires, it goes back to $12,700 for a married couple. That's going to increase your taxes. Republicans want to lock in the double child tax credit. That would encourage people to go up and get back in the workforce. They want to expand eligible use of 529 savings plans that help parents and students save for college and keep them out of student debt. But Joe Biden will tell you that we have to increase taxes so we can spend more money. His plan will do nothing to reduce the $35 trillion national debt that is forcing us toward bankruptcy. His plan will take money from one group to buy votes from another. That's how his politics operate. If you want the government to take more of your money, reduce incentives to invest, and keep spending like a drunken sailor, then Joe Biden, he's your man. If you want some fiscal sanity brought to the government, then Republicans offer you a lifeline, and you ought to grab it. It's been To My Liberal Friends. Thanks for listening.